Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, the market is open and as you can see, the market is behaving like a typical Monday market. There is not much volatility and we can expect the volatility by the US session. And right now we can see that gold is standing at 1960. As due to less volatility, overall levels on the chart of gold are still very much intact, or the levels that we discussed on Saturday are still very much valid. So my dear friends, if you are looking for a detailed analysis, please watch the video that I uploaded on Saturday because I do not want to repeat the same stuff and bore you again. So let's get started. So first of all, we can see that market is still trading around the support zone of 1960 to 1963. As I told you guys that we got the money we were looking for around this level on Friday, so this is our no trading zone. This is an uncertain level right now, and as retail traders it is not possible for us to understand the market on each and every price level. And right now this is the level where we do not have much answers, so as a result try to avoid any position in this area. During the day, if market shows downside, okay, during the day if market shows downside, if you see that gold is going down, observe the volatility of the market. Volatility will play a big role. So in this volatility, you can expect 1957 to work as a minor support for the market. Once market will hit 1957, it will bounce a little for till 1958, 59. If you want, then you can also go for a buy around this area. But if you're a beginner, try to avoid taking trades like this, because on Saturday I mentioned two strong support levels, and those are 1955 as the first level, and then we have 1951 to 1946, and these two levels are still very much valid on the chart of gold. Why 1946? Let me show you. Okay, 1946 we have derived this level with the help of Fibonacci here, and here you can see around 1951 52 we have Fibo 38.2% retracement level, and the same level also acted as previous support. And around 1946 what we have strong price rejection from below. So as a result, this is a big support zone for us, 1951-52 till 1946. Once you'll see market entering inside the zone, wait for the market to bounce. Once market, you'll see the market is taking support, market is showing price rejection from below, will give you the confirmation that yes, market is getting the required support and you can look for a buy position. And as I already have told you guys that for entry purpose you can switch to a lower time frame. You can switch to 50 minutes time frame just to see whether market is showing proper price rejection from below or not. And 1955 we are considering because for day trading purpose we are considering Fibonacci from this particular point here. And if I remove the overall Fibo here, then you can see around 1955 we have Fibo 78.6% retracement level. So if not a complete trend reversal, at least we can expect a minor bounce of 30 to 35 pips around 1955. If you see market taking support in 1955, you can go for a quick buy. But my dear friend, again I'll repeat, in case of heavy volatility, always rely on major levels. In this case, the major level is around 1951 to 1946. Clear? And 1957 is also present, okay, but it depends on the scenario. Okay, if market remains like this, then you can expect a quick bounce of 10 to 20 pips, but otherwise try to avoid. And my dear friends, the resistance level are also still very much intact. We discussed about two levels on Saturday. If market shows recovery during the day, especially before the US session, yes, before the US session, because during US session we have news coming up, as we all know, then markets sometimes get crazy during the news. Okay, again I'll repeat, my dear friends, as I always say, Try to close down all your US dollar position before the news. Do not gamble with your hard-earned money. Be a trader, not a gambler. News trading is one of the hardest form of trading. It is very difficult to understand the news because, and most importantly, when fundamentals dominate the market, technicals do not work, and you need to understand that. So in case during the day before US session, if market shows recovery, then we have resistance level around 1971.72 and 1975.76. These are two retracement level where you can, not retracement, okay, you can, two minor resistances where you can expect sellers to be present, and at least you can look for some quick selling opportunity around this area. Okay, the levels are still very much valid. At the top we have 1975.76, then we have 1971 to 1972. Okay, these are two levels where you can expect sellers to be present. You can look for a quick selling opportunity around this area. And my dear friends, this is Chart Prime, and we can see that these are the signals generated by Chart Prime last week. I'm on a 15 minutes time frame, and you can see that more or less the signals generated by the Market Oracle Pro from Chart Prime have done a pretty good job here. Almost all the signals have given us at least 25 to 30 pips, and which is quite decent on 15 minutes time frame. And with proper risk management, obviously you can take your trading to the next level. Apart from Market Oracle Pro, you can also see the Prime Oscillator Pro. The oscillator have also generated many signals, and they have also done a pretty decent job. Obviously, you cannot expect 100% accuracy from any human being or any tool, but yes, with proper risk management, you can definitely take your trading to the next level, because you can easily see that almost all the signals have performed a very good job. Yes, like other indicators, there will be some lagging, but at least after the generation of the signal, okay, you can expect that it will continue for at least 25 to 30 pips. Having a realistic expectation from the market is very, very important, and in with Chart Prime you can achieve that. So today is Monday, and as we can clearly see that there is not much volatility. If you already have purchased Chart Prime, then the simple strategy that you should follow for the day is, okay, simply look at the oscillator. When the market is less volatile, the oscillator does a fine job. Okay, if you see the market is overbought, and if the oscillator shows a red arrow here, you will get the confirmation that it's time to take a sell position. On the other hand, if you see a green arrow at the bottom here, you'll get a confirmation from the oscillator that it's time to take a buy position. How much you can expect from the market? You can expect 25 to 30 pips. And if the Market Oracle Pro also generates a signal, obviously you can go along with that, but with proper risk management. Right now, Chart Prime is giving a 30% off. You can scan the QR code on the screen, and if you're really serious about trading and taking your career in trading, you can also click on the I button on the screen or the link in the description. Feel free to check them out. And if we look at the chart of DXY, then DXY is also silent. Typical Monday market, not much activity. Market is still standing at FIBO 38.2% retracement level. During the day, if DXY tries to recover, shows some recovery, then the resistance levels are still very much valid. That is 101.50 will be the first resistance, and then 102 will be the second resistance. These are the two resistances where DXY will face sellers. Okay, but right now market seems to be showing signs of recovery. I don't know how the market will react after the news, so be careful, do not gamble. So let's wrap it up here. If you look at the overall trend of gold here, then the overall trend of gold still looks bullish, but right now market is standing at the previous support of 1960-1961 level, and we know that this level is not very certain to us. We are unable to detect the proper direction of the market here. As a result, it's better to avoid the market in this level here. In case market shows downside with volatility, then only focus on major level like 1946 to 51. That's a big level. We have price rejection from below as well as Fibonacci and previous support. So 1946 to 1951, 52 is a big level. If market bounces, we can go for a buy. And in case market comes down, shows downside, but without much volatility, we can expect 1955 to work as a minor support where you can expect a bounce of 30 pips. 1957 is also present, but it's dicey. It's better not to rely on much on 1957. It depends on the scenario. In case market shows upside before the news, okay, then we can look for some quick selling opportunity around minor resistances with what we have derived with the help of Fibonacci retracement, and those levels are 1971, means the Fibo 50% retracement level 1971-72. Then Fibo 61.8 is 1975-76. Simply draw Fibonacci from the top of the chart to the bottom of the chart. You will find the retracement levels. Okay. Keep in mind, overall the trend of the market seems to be in uptrend. So as a result, do not look for complete trend reversal and sleep. Okay. If you take a sell position, be aware, because taking a sell position in uptrend market, okay, overall trend on 1 hour time frame is still in uptrend. And day traders, you need to be extra careful. Okay, you can look for a quick selling opportunity. Now let's wait and watch how the market reacts. Market is behaving like a typical Monday market, so not much volatility. Let's see. That's all from my side, my dear friends. Bye bye, take care. And as I always say, this is my analysis. I can be wrong as well, so please follow proper risk management and do your own research analysis, and do not gamble. Bye bye, take care.